We've never seen anything like that. Mankind has never seen a larger wealth creation opportunity in a shorter period of time in all of history. Even oil didn't happen as fast as that because there wasn't enough uses for it. This, because it's digital and built on top of the internet, means you've kind of got Metcalfe's law on top of Metcalfe's law. So the exponentiality of the returns is simply gigantic.
Macro investor Raoul Pal is not backing down from his massive Ethereum and cryptocurrency bet and is now looking to 2022 for returns the likes of which mankind has never seen before. In this video, Raoul gives his latest update on the crypto market and why he is expecting January to be a huge month for the space. He also breaks down his current holdings and how he personally manages risk and volatility in such a turbulent market. Make sure to stick around to the end of the video where I will cover the latest on-chain Ethereum data to see if it backs up Raoul's thesis. Also, only a small percentage of my viewers are actually subscribed. If you enjoy crypto content, consider subscribing or liking the video. It's free and you can always change your mind.
This is the fastest adoption of any technology in all human history. The internet, with 150 million users in 1997, was growing at 63% a year. Crypto, with 150 million users, is growing at 113% a year. So we go, because it's an exponential trend, we go from 150 million users to 1 billion users by 2024. That's how fast this is growing. Currently, it's a $2.5 trillion market cap. If we look at how fast tokenization is eating into other assets and growing itself, and we look at those adoption numbers, then the reality is all of the other asset classes, global equities, global bonds, global real estate, are all between 200 and 350 trillion, with the derivative market being 1 quadrillion and FX even bigger. So the thought process is that therefore, if crypto goes to 250 trillion, which sounds about right, and it's
100x in 10 years
of an entire asset class, we've never seen anything like that. Mankind has never seen a larger wealth creation opportunity in a shorter period of time in all of history. Even oil didn't happen as fast as that because there wasn't enough uses for it. This, because it's digital and built on top of the internet, means you've kind of got Metcalfe's law on top of Metcalfe's law. So the exponentiality of the returns is simply gigantic. Now, let's say Raoul's an idiot and it all goes to zero. So the downside is, let's say I'm going to use Ethereum and let's call it 4,000. So we lose 4,000. But if it goes 100x up, you would take that risk reward forever. Now, it's not going to zero. Is it going to go down 50% to 2,000? Let's say that's the risk. So it's 50% downside, 100x upside. Okay, that's a 200 times risk reward. You know, this is why nobody cares about most of the macro stuff anymore, because we all saw the rise of the other Metcalfe's law business models like Amazon, Google, Facebook, Apple, even Tesla. And we're seeing this again, but in an entire asset class of which we can participate this time as both participants in the networks and owners of the networks. And it's available to everybody. If I'm right, and let's say you're a cynic and you put in 1% and I'm right, you can still make 100%. Right? You can double your net worth with a 1% allocation. So you can be a cynic and take the bet, or you can be like me and put, a large part of your liquid net worth into it because you really want to capitalize on it. Fine. You take your journey. You take your risk profile. That's all good. But to not have it makes no sense whatsoever. Again, you might not like it. You may not agree with it, but nobody cares what you think. The market is what matters, and the adoption effect. Again, people become emotional about assets. You shouldn't get emotional. You should look at the cold hard facts of it. I've kept adding all the way through. I just switched my portfolio towards Ethereum and now almost entirely sold out of my Bitcoin and invested more in Ethereum and then a bunch of other tokens as well. And that was based on understanding of network effects and how many people were joining the Ethereum network and the number of applications being built on it, which is basically what drives Metcalfe's law, the value of the network. Also, I noticed that the community within Bitcoin was a little too overly tribal, and that was forcing people out of the community. So we've got one community that's shedding members because it's not community that's very welcoming and that's growing extremely fast. And, I'm a macro guy at heart, so I just look at the chart of ETH versus Bitcoin and it was going to break out. So I just moved all my eggs into a different basket. If I'm looking at it right now on my Bloomberg screen, ETH's up 430% this year and Bitcoin's up 65%. So it kind of worked. I have basically enough in the bank account to pay my bills. Every single other penny is in this. Sure, I've got shares in Real Vision and all that other stuff, but that's not liquid net worth. That's all private stuff, and I've got houses and stuff. This is every single penny. So do what I do. It sounds ridiculous, but it works really well. You put the money in, your overall risk, what you're prepared to lose. Let's say it's down 50%. That's a reasonable estimate of what you should be not concerned. 50% drawdown this year. So you say, well, 50%, maybe even 60%, maybe 70%, whatever the ridiculous number is. And then you don't look at your P&L. You can allow yourself to look at the P&L at all-time highs, just so you can just smile to yourself. You don't look at it. You can look at the market. I've got the charts up. I've even got the bloody hourly chart up. I don't trade hourly. I don't trade my position at all. But I look at it because I like to kind of follow the structure of the market. So I match my investment horizon with my time horizon of the trade, and I satisfy the adrenaline buzz by messing around looking at short-term charts. I don't trade at all.
So there is Raoul's latest update on the enormity of the opportunity in front of us and how he personally handles volatile prices. Now, to look at some of the most recent on-chain Ethereum data. But before that, today's video is brought to you by the channel sponsor, BlockFi, the leading provider of financial products and services for crypto investors. At BlockFi, you can put your crypto to work, earning up to 5% interest on Bitcoin and Ethereum and 9% APY on stablecoins. If you are a crypto holder like me, you may as well be putting your holdings to work and earning passive interest on your stack. BlockFi is backed by some of the biggest names in the industry, such as the Winklevoss twins and Coinbase Ventures. BlockFi has also recently released their BlockFi Bitcoin Rewards credit card, where you can earn 3.5% back in Bitcoin for all purchases in the first 30 days and then 1.5% thereafter. They also recently ditched their annual fee, and there are no fees to use the card. To start putting your cryptocurrency to work and earning interest, and also earn up to a $250 crypto bonus with a deposit of $100 or more, go ahead and check out the referral link in the description right down below. Now back to the latest on-chain Ethereum data to see if it backs up Raoul's thesis. First up, out from sentiment, we are continuing to see divergence with Ethereum's network growth whilst the price is falling. Generally, as the network grows, you tend to see it in tandem with an increasing price. However, if you subscribe to Metcalfe's law in that a network's value increases as it grows, then this is a positive sign. One potentially bearish piece of on-chain data that we would like to see reverse, however, is the Ethereum balance on exchanges, which is beginning to tick upwards. If we are going to continue to see growth in the Ethereum price, then this is a trend we would like to see reverse and continue downwards. Definitely keep an eye on this one. Anyway guys, hope you all have a safe and happy holiday break. I'll see you all in the next video, and as always, have a great day.